Tesla stock is down 37% in the month of December alone. A lot of this has to do with tax loss harvesting and investors discounting potentially earnings coming in 2023 from Tesla that could be a disappointment. Now, here in this video, we're going to argue for both sides. We're going to have positive things that are going to be happening for the company, which should in theory lead to a positive reaction in the price of Tesla, and which could happen pretty shortly in 2023. We're also going to talk about some of the risk factors here so you guys can come to your own conclusions. Now, let's not waste your time. Let's get into this video. Hit that like button and subscribe to the channel because they are free 99, guys. So first things first, let's talk the negatives. So some of the biggest negative things going for Tesla right now is the high expectations. For 2023, analysts are projecting Tesla's deliveries to grow by 46%. 2023 is going to be a year dominated by recession fears, the consumer slowing down, and a federal funds rate that is over 5%. Typically, automakers do not fare well when you have these multiple factors basically compounding on themselves. So that is one potential big risk factor for more downside pressure for Tesla stock. You also have Elon Musk, and this could be equally, if not more important than what we just talked about. Elon Musk spending way too much time at Twitter. People do not like that. Tesla is a big company. They're a baby in terms of where they're going to be in the future, hopefully, right? They want somebody at the helm of Tesla controlling the day-to-day operations, making sure that there is more value being added than taken away. So Elon Musk over at Twitter, day in, day out, that's not seen as a positive thing for the stock. It's almost like Tesla doesn't have a CEO in the minds of a lot of investors. So those are two of the more negative factors. Now let's talk about the positive factors here briefly. High growth. So even if Tesla does not reach their 46% analyst projections for delivery numbers, in an economy that's only expected to grow 0.5% to negative, anything in that realm of 40%, 35%, that's going to be extremely positive. And most of the time, in normal market conditions, when growth is slow, what tends to do well is high growth stocks that are free cash flow machines, profit machines, right? Your tech stocks that don't have to endure the same kind of pressures that typical companies do. Now, Tesla a little bit different in there because they do appeal to direct to consumer, right? But nonetheless, when there is low growth in the economy, high quality growth stocks tend to outperform your cyclical stocks, your construction stocks, even your healthcare stocks a lot of the time, unless they're high quality, right? High quality will be a theme of 2023. Now, another very positive thing that only really analysts are talking about, I don't see too many videos on this on YouTube and people talking about this in general, but the $7,500 tax credit due to the Build Back Better plan is now going into effect on January 1st. Now, for perspective here, if you buy a Tesla, the two most popular models, the Model Y and the Model 3, starting on January 1st, you will receive a $7,500 tax credit. Now, let's break down some simple math on why this could be a big factor leading people to buy Teslas instead of other vehicles. Well, simply put, let's just break it down really easy for you. If you bought a Tesla for $45,000, forget the number you're buying it for. If you put typically $4,000 down to finance that vehicle, you instantly get a $7,500 tax credit. You don't have to buy that vehicle in full. So technically, you're spending $4,000 down on the vehicle, you get $7,500 back on your taxes. It makes sense for a lot of people to go out and buy Teslas, to buy electric vehicles. So I think that will actually be a huge factor that leads people to switch over to Teslas a lot faster than what they normally would have. And I think that's pretty key to point out. Now, on the other hand, something that is very bullish that a lot of people know about but don't know about at the same time is the tax loss harvesting, the way it actually works. So tax loss harvesting if a hedge fund, for an example, or you, really, it doesn't matter, if you have been buying oil stocks, healthcare stocks, and the Dow names, and you're actually positive in your portfolio for 2022, but you got Tesla, you got Apple that are down, you can go ahead and sell those stocks that are down to offset your gains in other stocks, but you got to wait 30 days to rebuy that stock. And there's something called T+2 settlement time. So from yesterday's 8% gain that we seen yesterday on Thursday, that was the last day. Well, the day before that, really Wednesday, was the last day that you could sell a stock in 2022 to have that trade actually settle before the beginning of 2023. So that's a big reason why I did think you seen that 8% day even yesterday, is because you could no longer tax loss harvest Tesla stock. And I think a lot of people were starting to position for a really good 2023 for the company. So you're not going to see any more of that tax loss harvesting. And I do think due to the quality of Tesla, you're going to see more bullish positioning than not. Because after all, people are not saying you want to sell Tesla. They're not saying that. They're saying, hey, you might be able to get the stock at a better price if the markets do fall, but it's already fallen 72%. I think that is another bullish factor for the company. It's already priced in a lot of these downside pressures, right? 72% in a year for a high quality name, a profit machine like Tesla, innovating for the future. That's going to be a much bigger company in the future. It's not even really a question. If Tesla's going to work, it's already shown it's going to work. So 72% down looks like a compelling, argument to go ahead and buy some Tesla. So those are some positive factors to the stock that I think could see a pretty positive 2023 for Tesla investors. Now, starting next week on Monday, you are going to be getting the fourth quarter delivery numbers, right? And that's going to be a very big deal. We're expecting record deliveries. We're expecting around 429,000 deliveries. If this number comes in higher than expectations, which it usually does, that would be very positive. If it comes in lower, I think the markets have priced that in already. If it comes in substantially lower, that's where you get more pain for Tesla shareholders. Now, if you take a look at the technicals on Tesla, you've really hit an interesting level. So you've hit a long-term support level that got tested a couple of times back here in September of 2020. You hit that level around roughly 408, and then you bounced right off of that with velocity, right? With high volume. You did see a 3.31% positive day after hitting that low, and then you've seen an 8.08% positive day yesterday, and now you're pretty much flat on the day, down about 0.5%. Even given the NASDAQ down over 1%, the S&P down over 1%, Tesla is seeing a very positive day, right? And after all, if you wanted to buy Tesla, you have not had a better chance to do so since September of 2020. After all of these gains, your let's just go ahead and look at it from the pre-COVID peak. It's still up 67% from then, but it was up 526% from the COVID peak to the peak of the markets in November of 2021. So you're getting a much better deal on Tesla now than you have been able to in over 2 years. So for those factors, I do think Tesla could see a very positive 2023, and as long as earnings hold together for the broad markets, I think the beginning of the year would also be bullish. But you do have a lot of people that are projecting lower earnings for the markets, and not a lot of analysts have really cut their earnings projections as of yet. So when that happens, that's really when you're going to see a brunt of that downside move in the markets. But from my perspective here, if individual companies' earnings can hold up, they might not be as nearly as badly affected as some other companies, considering a lot of them are down quite a bit, guys. So there is that information for you guys. Let's go ahead and take a look at the Ortex data as well on Tesla to take a look at the option activity, most importantly, I think, because this is going to be your positioning, your leveraged positioning from hedge funds heading into 2023. So you do have 409 orders on the day, totaling $67 million, positive order value of 56%. So a positive positioning from hedge funds. That is a very bullish thing in my personal opinion, right? Now, as far as the short interest, not going up too much on Tesla at 2.67%, which is historically on the lower end still for Tesla. So I do think that's good. People are not betting against Tesla in a massive way. The short interest is not high, right? It's not 10-20% in very high territory. That means overall not a lot of people are very pessimistic on Tesla, and I think a lot of shorts have just got burned so much in the past. They're going to be a lot more careful when they do short Tesla. So that's positive. You're not seeing this overarching bearish thesis on Tesla right now, and considering the stock has fallen so much, I am going out and starting to leg into a position, guys. So that is it for this video. We did cover a lot. Hopefully you guys enjoyed it. Hit that like button, subscribe to the channel, and most importantly, enjoy the rest of your day, and I will see you in the next one.